see how much we can stay. All right. Let me welcome on stage Flora. Flora is the director of APAC implementations at WISE. She leads API integrations and partner onboarding across the region. She's been previously with Visa and she's delivered multiple complex payment and digital currency solutions. So, welcome Flora. Next up, Balaji. Balaji Natarajan is the head of strategic sales for payments and cash management at ANZ. More than 30 years of experience in banking and fintech, and he's delivered tailored liquidity and payment solutions for many clients. Welcome. Next, we have Angad Dhindsa from Razorpay Singapore. He leads business strategy and growth in the region. More than 20 years experience being with fintechs, Meta, Paytm. So I think that's going to be very interesting. Not to talk about AI. Finally, Sharon. Sharon though is head of ASEAN at Swift. We heard about Swift earlier in the day, so we're going to hear more about what their plans are from Sharon and how they are helping the whole payments rails. So my first question, let me start with you, Balaji. Our APIs, so I'm purposely moving away from AI and talking specifics. Our APIs and real-time rails, how are they transforming liquidity management and the payments flows in the region? And you can use transaction banking lens if you want.
Well, thanks. Good afternoon all. Pleasure to be here. It's an interesting question. I don't see API. First we need to know what the API is. To me, API is more an applied and programmable intelligence. And why that is when we kind of sometimes forget the context, right? Basically, API allows unbundling of services. So today what I have is more a monolithic structure across the banks, either siloed by functions. Now, the whole idea of API banking and probably more generally open banking was to unbundle, so customers do have a choice. So that brings back to the question as to what are we there for as a basic purpose? I mean, the banks don't exist just for ourselves, and you have a customer, you have a need to be met, both for the society and for the customer. So if we start taking that lens, what we talk today is more about achieving that purpose, that goal which adds value. And sometimes that gets lost in a lot of the work what we do, right? I mean, we become more rule-bound. Now going back to the question about real-time payments doesn't evolve just because banks want it. There is a business need that underlying commercial activities have started becoming a change. What are the forces that technology, the business models have changed? So when you now confront with such a situation where the whole economics have changed, you need solutions to cater to that. And what that means is that today, 20 years, internet as a model, business model, with e-commerce picking up, you start having to find solutions which are effective and more particularly enabling to the business. When I say effective, yeah, you could pay through credit cards, but you can't do an account transfers, right? I mean, because the money is going to go overseas in many of controlled markets. So you needed to start finding solutions. So then you started having domestic marketplaces selling. So credit card is still expensive. So you start looking at local account-to-account transfers. Now when you have localized account-to-account transfers, Pay Now or UPI, these are domestic. You now end up having situations when mobility of people happens, how do you interconnect? The same also applies to corporates who end up servicing customers in multiple jurisdictions. You collect locally, you pay taxes locally. And if you're a global treasurer, you're stuck with trapped cash in a number of countries in ASEAN. About 6, 7 allow free movement of currencies. You end up having situations where you might have visibility, but you really can't move in the time. So there are a lot of gaps. We talk about banks being enabler, and where the idea comes about that no one bank can solve any of the issues. We can at a microcosm look at a particular segment, but the reality is you have to collaborate. You have an ecosystem, I mean the entire world is an ecosystem, you need to partner, you need to support. And that's where I see the collaboration as the underlying theme. And it's a kind of building a kind of a network across. I mean, SWIFT is an excellent case. The banks came together, 8,000 banks. At least there's a commonality that we all agree on that. Disruptions continue to happen, but many of them fold back into the mainstream and positive.
So, right segue for my next question to Sharon. We're talking about collaboration, and SWIFT is a great enabler of collaboration. So, my question to you is, how are you enabling the next gen payments when it comes to, cross-border payments, be it, multiple jurisdictions? How is SWIFT doing more to do that?
There's a lot of expectations of SWIFT. Thank you so much for the opportunity today to be here. It's a very broad question, right? There are a lot of things I really want to cover. I'll try to encapsulate everything within a few minutes on SWIFT's role and what we're doing to enable the banks, right? When it comes to cross-border payments. But I will kind of break it down into the now and the future. And I think it's important for me to talk about the now is because I want to level set everybody's understanding of SWIFT. And if I talk about the now, SWIFT, as many of you probably will know, we are a trusted cooperative. We are a cooperative, not for profit, created by the banks some 50 years ago to basically come up with a common language for banks or to transact with each other, to exchange information with each other in a standardized way. So today, we connect 11,500 financial institutions, corporate central banks in over 200 countries. Over our network, we support over 150 currencies, so we are currency agnostic. And basically, the banks are exchanging transactions securely and reliably, and importantly, at incredible speed. So I want to put that in perspective. So today, over 90% of cross-border payments that goes over SWIFT, it's reaching the end beneficiary banks pretty much within an hour, right? And we're far ahead the G20 targets of 75%. And in fact, many of them are in seconds. And contrary to many misconceptions, over 86% of transactions that go over SWIFT today either goes directly to the beneficiary bank or with a single intermediary banks. Not all transactions have multiple hops. So I just want to make sure I bust a bit of the myth here. And how do we do that? How can we do that to have that kind of speed and transparency? And simply, it's mainly driven by the Global Payment Innovation, which is GPI, which we co-created co-developed with the banks in 2017. And this has enabled us to be able to track payments, to see some of this information over our network. And at the same time, there is a SLA rules whereby it allows our banks are abiding by those rules so that it can that's why we have the speed, we have the transparency. So that's an important piece. And today GPI is already the norm that we're seeing globally right now. Now supporting this is building capabilities that really remove friction. Now SWIFT will not be able to solve for everything, but we'll look at areas where there is opportunity for us to remove frictions from in a payment itself. So capabilities like being able to pre-validate transaction or end beneficiary account to prevent errors before a payment is sent, or a case resolution service which will allow our banks to be able to streamline their investigations so that they could bring a lot of efficiency when it comes to payment investigations. And I think to unlock, well, before I kind of go there, the other cornerstone of, I think when it comes to what we're doing is moving the whole industry into ISO 20022. And this is fundamental, this is foundational. And just want to say is ISO 20022 is not just a format setting project or a technical task. It will give the transaction, you will have the transaction will have all the structured information and rich information. And earlier on, I know I'm just going to mention AI. When you have enriched data, for AI or any technology, you need data, and you need enriched data to power that, right? If not, you're going to get rubbish in, rubbish out, right? So you need those information. So ISO 20022 will give you the enriched data that could improve not just efficiency itself, but also to help you when it comes to screening, better screening, and also to improve reconciliation. So that is a foundational, I would say, piece of when it comes to payment. And what we have also done to try and unlock some of this is also looking at APIs. So we have enabled a lot of our services now using API. And why do we do that? It's because our clients or the banks actually, in fact, has a lot of assets and value at their back end, but they're not really exposing it to their front end. You talked about customers' experience, delighting your clients. It's how do you bring that back end value into the front end itself. So this is an important piece. So we have actually developed. Now we have all the API protocols for basically all the capabilities that will enable banks to do that. But I think from a now perspective, I think one really important piece and is really paramount is security. So this is front and center when it comes to cyber threats or when it comes to fraud. This is front and center in everything that we do. We want to make sure that everything that we do, it addresses that as well. So earlier on I mentioned some of the capabilities that we've done, but we are also, sorry I need to talk about AI, but we have also embarked on a journey whereby we're using AI to look at payments anomalies. Right? So we have used AI in some of the capabilities that we have. We have also started an initiative which we have 12 banks, together with 12 banks globally, to look at how do we do federated AI. So it is something that is being, there is already some use cases that came up, so we are in a discussion right now with the industry and we'll be engaging the central banks on that. So that is really kind of the now. But I have
Okay.
sorry, just bear with me, okay? But in the future, and I think that is foundational is because, we need to make sure that all of these things are there. It becomes a foundational layer for us to look into what we need to do as we prepare everyone into the future. We know we are in a very fast changing landscape right now, very fragmented world right now. We're going to have many new forms of money, whether it's digital assets, digital currencies. There's lots of that right now. So for SWIFT, we have been, set up to interoperate the world, and now more than ever, we see the role that we play in going forward in the fragmented world. So we're really looking at it in three areas, right? One is to continue engaging our central banks, market infrastructure, to ensure that all their payment systems are ISO 20022 ready and following the global market practice. And why that's important is because for banks who are participating in those payment systems, if every domestic payment system has their own version of ISO 20022, it will be very, very difficult for banks to participate because you can imagine the kind of format that you need to integrate. Everyone has a different format. So that's one. Second thing is, how do we connect this fragmented ecosystem today whereby we have the wallets, we have the PSPs, we have the banks. So we are partnering as well with a number of fintech players. So whether it is Wise or we've got wallets aggregator like Ant Financial, TerraPay. So we're working with some of these partners right now to look at how we can ensure that all the transactions from the there's visibility, end-to-end visibility of the transaction itself, from banks to these wallets to all these, I would say, alternative rails going forward. So this is the other piece. The third piece is how do we then interoperate all the digital networks, like all your CBDCs and stablecoin. How do we interoperate them? Because when you look at finance, you look at commerce, you look at payments, it's global. So it's not on its own, or it's between two countries or two players. So we are looking at how do we interoperate them, which we have live trials going on this year to really do that.
It will be very interesting because, I did not realize that when you spoke about federated AI, I did not know it's happening already. So it's really
It is
interesting.
an initiative that we have already started
And
exploring.
if I can just check, when you said that you have more than 11,000 banks as a part of the SWIFT network, is it just banks or is it also the fintechs and?
Yeah, everyone. So it's corporates, it's also market infrastructure.
Thank you. Thank you. So staying with cross-border payments and moving money here and there, payments. I'm going to come to you. Flora, how are you rethinking cross-border payments? Is it something that you're starting from scratch and saying, okay, let's just stop how people used to think about moving money from one country to the other and just completely restart and give them something that is not known to people right now?
Sure, happy to share. And I think it's incredibly exciting that we have both Swift and Wise on the same panel. And I think that there's a lot of collaboration that we're seeing on the cross-border space. So in particular here, the piece around redefining, before I kind of get to the redefining piece or what Wise is doing here, I would love to share a little bit about customer experience. Because I think a couple of us have mentioned customer experience. And the reason why I want to start there is because that's really the origination of everything that we do. It's about creating a product that the customers want. But when it comes to the international payment space, where we see that the customer expectations are changing, it's shifting. Customers want things to be faster. Like how fast? They want it to be instant. Customers want things to be really seamless, very, very digital, very convenient. Where is this expectation for international payments coming from? Specifically at Wise, what we see is that it's being shaped, it's being influenced by the domestic payment side. And because stellar domestic experiences are now on the rise, UPI, I just saw that. We're in 2025. UPI came out in 2016. That's like almost a decade ago. That's incredible to me. So UPI, and of course Singapore with Fast, we're seeing that customers increasingly now have access to instant domestic payment rails that are in real time. But also they can use alias services like email or phone number to send large amounts of money. And that sort of shapes the customer experience and the expectations. But what we're seeing is that traditionally international payments are just not at the same level as domestic payments. And the reason why there's a bit of a gap is because from an international space perspective, what we see is that the banks are used to serving and started by serving domestic needs. But when international needs came along, they continued to use that same corresponding relationships to facilitate these emerging international needs. But international needs have a different type of landscape. We're talking regulatory, we're talking interoperability, and therefore we see that the international space is lagging behind a bit. But in order to meet customer expectations, that's sort of where we need to be. And so from a customer expectation, from a customer value or experience perspective, at Wise we see that there's an amalgamation, kind of like a trifecta of themes that is now emerging. And that results in its instant, its transparency, and its convenience. A lot of things that we kind of already spoke about as well. But let me first define a little bit of what Wise thinks about these themes. So instant first. I know we spoke about instant, we spoke about fast, but at Wise, instant really means instant. We're talking not cross-border like within the same day, not within hours, not even within minutes. We're talking seconds. In particular, Wise defines instant as less than 20 seconds. Like in the time I took to describe instant, that's already more than 20 seconds. So that is incredibly fast. And Wise now facilitates more than 70% of our transfers instantly globally. And just a year ago, we were at 60%. So within a year, you can see how much progress Wise's mission since the beginning. It's all about price transparency, but also transparency on the visibility of where are the transfer at any time. Sharon and both Balaji has mentioned earlier, this is something that traditionally we might have struggled with, but now we are striving towards giving that more visibility. So there's transparency here. Then the last part is on convenience. Convenience to us is really about end-to-end digital journey, meeting the customer where they want to be, seamlessness. So then at this trifecta of experiences, let me pull in the Wise angle and kind of what Wise is doing here. Because what we see at Wise is that Asia Pacific alone, we estimate, give or take about a $4 trillion opportunity just in the low value payment space, which is really what Wise focuses on as well. And in order to capture opportunity like that, we need to meet the customers where they want to be. And that's exactly what Wise has been doing for the last 14 years. Like, this is what we've been building. And specifically boils down to our infrastructure. And by infrastructure, what I specifically mean here is the connections that we have. And connections, I know Sharon also mentioned connections on the Swift side. Connections, for Wise, is really about the way that we can reach the world. So Wise currently is able to reach 160 countries in 40 different currencies, whether it's through direct bank partners or direct connections. And the direct connections piece is actually really interesting to me because it continuously showcases Wise's ability to really partner with the regulatory landscape, with the domestic payment schemes. So we have, for instance, FPS in the UK, Singapore Fast, but also adding like InstaPay in the Philippines recently. And next year we're launching with 2 new live domestic schemes. One is in Japan with Angad, and the other is in Brazil with PIX. So that's incredibly exciting to me. But beyond local rail access, that's, the first step, gaining access. What do we do after gaining access? I think that's sort of where the power of the Wise infrastructure also comes together. It pulls everything together because we're talking about having understanding and expertise in things like compliance, things like technology, things like operations, finance, liquidity. I know we mentioned that in the previous panels as well. It's about tying all these things together, and I think that's exactly what Wise does really well. And we've been seeing a lot of benefits. But instead of sharing benefits from the Wise side, maybe I'll pull in a little bit of our partner, because that's Wise platform. We work with partners to launch cross-border remittance solutions. One of our partners in Indonesia, earlier this year, a digital player called Flip, they integrated with Wise and is now showing that transparent, convenient, very instant remittance experience to their customers. They are seeing almost 10% increase on all of their transaction volume side, but it's not just top line, we're talking bottom line as well. In particular, we're seeing that. I think earlier we mentioned like AI and how we don't want to like call, I think it was like 80% of the customers don't like to call. Well, this partner in particular saw a reduction of at least 40%, if not 60% on some of the routes in terms of contact rates. So that means on one side we introduce more, we have more volume, the other side we have less contacts. Win-win for our customers, right? Much better experience all around. And so I guess sort of how I'll wrap it all up. And the last thing I'll mention here is I think what's really exciting for us is from a partnership perspective, we're seeing a lot of growth. Like Wise has been doing this for the last 14 years, but maybe 3 years ago we were partnering with the likes of like large digital players like your Monzo, N26, Aspires, but now we are partnering with large tier 1 global players like Morgan Stanley, like Nubank, but also like Standard Chartered, who's sitting here as well. So I think there's a lot of excitement. I think a couple of us mentioned collaboration. We definitely see that to play as well.
Fantastic. I think, overall, you started with customer need. I think that's very real. I think, I personally, last year took almost 48 hours to transfer money outside India.
Not a Wise, I hope.
Not a Wise. Yeah, I hope there was a Wise platform then that I know of. But clearly there is, I think, there's a customer requirement, and that's the beauty that you are solving for a particular customer requirement. You said instant 20 seconds. I'm going to just take that one bit forward. You spoke about UPI. It happens in a few milliseconds, and I think you would know that a lot more. You are playing in the space. Razorpay is a very big player in the Indian market, so you would know the Indian market a lot better. What kind of perhaps best practices maybe you can bring over here. That's one. We've seen the growth of QR codes, for example, in India. That's become almost ubiquitous. It's growing in the Southeast Asian region as well. So where do you see all this going? And ultimately, what would this lead to? Would it lead to more fragmentation in the market or more concentration in the market?
Thanks guys. Thank you for having me over. For those of you who don't know Razorpay, we're the largest payment aggregator out of India. We've been in Southeast Asia for the past 4 or 5 years, where we're accepting payments in Malaysia and now in Singapore. We also have a loyalty business here. So, yes, I think where we see an opportunity that's been growing, and just to look at the lay of the land here, right? Digital payments, fast expanding, growing at a really fast pace. I think some 215 billion volumes in dollar terms. 70% of online payments are happening via APMs, which are alternate payment methods. And that's what gets us really excited, because we came from a country which UPI today is 80% of Indian volumes actually happen in UPI, which is account-to-account transfer. So it basically just jumped a generation where everyone started using their mobile phones and started transferring money very easily from one account to another account. When you look at the evolution of what's been happening in Southeast Asia, it's very interesting. You had the growth of wallets, and wallets have done phenomenally well. They're growing at a very fast pace. But what started coming in more recently has been the growth of account-to-account transfers in every country, right? We sit in Singapore and it's a card-first market, but most of the developing markets are not card-first market. Hence, 70% of money movement is actually happening via either wallets or account-to-account transfers. And then PromptPay has done very well. Do It Now has done phenomenally well. So it's picking up. In Malaysia, we see literally 40-50% of online volumes are happening via FPX. It's not. None of these markets are card-first markets. What starts happening? You see a general evolution, right? You have a lot of wallets coming up. You have account-to-account coming, and there is a lot of fragmentation. Now, fragmentation can happen both. We've been talking cross-border, and we've been talking domestic. So you've got to have domestic fragmentation, which I think all the regulators realize that nobody's looking for walled gardens. You want to make it much more simpler for merchants and for consumers, that they can very easily, anyone can use any app and make a payment where they want to make a payment. So then in the evolution starts, the interoperability part starts coming in, where SGQR comes in, Do It Now QR comes in, where all wallets start using the same QR format, and boom, suddenly it works really well. And that's what eventually happened. I used to work for another company called Paytm, used to be a big wallet in India. Eventually when UPI came, even though they tried to stick with the wallet, they had to come on UPI. Because if you don't come on board, then you get left back, right? The bigger challenge happens is in cross-border fragmentation. Because here you don't have a government that can just put the hammer down and say, guys, everyone get on the same this thing. So there, what you see is there are a bunch of initiatives that are happening, because the governments do realize, especially in Southeast Asia, there is so much of travel, trade between the countries that you need to have interoperability, which is why the RPC initiative, which was the Regional Payment Connectivity Initiative, which started off with 5 countries, picked up. You have also Project Nexus, which is instead of having a bilateral, like the way Singapore, Pay Now, PromptPay started working, you can transfer money from PromptPay to Pay Now, etc. You started having a much more multilateral way, where you want a bunch of countries to come in, hook up to one system, and they can move money between their real-time payments. But it's slow. It's always going to be slow. You have governments, regulators which are trying to work together. There are different that each one expects the other to follow. There are just as simple as, there are different priorities, right? There's so many initiatives happening by each of the organizations. When you look at PayNet, you look at, which is, there's a new NAS or banking, this thing, I think they have a new organization which is going to be driving this, all the fast payments here, SPAN. So everyone has their own priorities, right? So that slows things down. But but there is a role to be played by private sector players. Look at what Ali's done. Ali's literally gotten all the biggest wallets and merged them together. One thing that we do, and the opportunity that we see in Southeast Asia, is fragmentation. How can you give one API access to all the APIs that are there? And I think last we counted there were 35 to 40 integrations that a large merchant needs to do. Otherwise, they're doing multiple hops, and it's very expensive. They're going with large global aggregators who are going via somebody else who will eventually be going via me. So there is a huge opportunity in providing that aggregated platform to merchants and other institutions. Yeah, so I mean, when you look at from fragmentation, yes, initially there is fragmentation. Eventually there's going to be convergence, but that's the evolution that you're going to see everywhere, right?
You will have to go through those.
You go through that evolution.
Fair enough. I think, we managed almost not to talk about AI. Almost.
Can I just
One
comment,
question.
can I just comment
Yes,
something
yes.
about fragmentation? I think what we've been seeing is, I think the bigger problem, I guess, from fragmentation perspective is regulatory, right? I think from a technology side of things, it's you can interconnect. Technology is never the problem. The reality is that when it comes to regulatory landscape, it's fragmented. Because the moment you go across border, every country has their own regulations that you need to follow. It is very hard for any banks or even players like yourself to be able to have to comply to every one of them. So this to me, I think is the biggest challenge, is the biggest issue. I'm not even sure if there will be an opportunity to harmonize regulations. I think that is a difficult one. But if I look at ASEAN, right? So right now, what ASEAN is trying to do at the government level is to come up with a ASEAN Digital Economy Framework Agreement. This is going to be the very first legally binding agreement that they will cover digital payments, digital trade, cybersecurity, cross-border sharing of data. And hopefully they'll get to some, and I think this framework agreement is definitely going to help. But they must first come to an agreement on the rules and how are they going to harmonize that. And this is still being worked on. It has been working on for the last few years. And they do have a target to say, let's try to complete that at least this year in Q4.
Get everyone in the room, lock them up, and tell them that you
That's
cannot
what
come
they have
out.
been doing.
Right? All right. So, final question, common question to all of you, and slight twist. Okay, so the question goes like this. So, if you had 100 million to invest, assuming you have 100 million to invest, what's that technology that you would want to invest in? Of course, in the payments domain, and why? So we'll start across the podium with you, Flora.
Sure, wow, putting me on the spot for sure. I don't know if maybe I would be investing in somebody's barista shop instead, but if we're talking payment technology, sort of trends-wise, I think the piece on interoperability really resonates a lot with Wise. I think the way we think about, it's very difficult right now to ensure that everybody has the common standards across market, across technology, across payment methods. So I would love to be able to invest, I'm not really sure if this is a payment technology, but invest in initiatives to standardize what that regulation could look like. But also there's the piece about, if we see more aggregators being able to provide services, partnership is a must. And so from Wise's perspective, in particular Wise Platform, how we think about it is we're together, we're growing the pie of Wise Platform, plus all of the players within the ecosystem. So to me, it's about leveraging the ecosystem and the infrastructure that we've already built and growing on top of that, to continuously building on it to provide the value for the customers, whether it's that instant, that transparent, that convenient space, by leveraging standardized, interoperable standards, and hopefully technology as well.
Only money won't do that. You're trying to get everyone to agree, only money won't do that. But we'll take that. Balaji?
I'll probably invest in training people, because we are missing the biggest element in the whole scheme, right? Payments exist not in because there's a transfer some agent wants to do to other, there is an underlying purpose. So the 100 million could be used effectively to educate, train, upskill the people, and that is where we get a convergence in the mindset. In absence of that, we'll have fragmentation, we'll keep inventing new technologies, which are not solving new problems, but will end up creating more problems for future. So it's stop.
Perfect. And if I may just probe you, do you think the training is required more at the senior level, mid-level, or junior level?
See, we are talking about a mindset change, right? People are ready to adopt. All the digital banks which have come up is because somebody thought that consumers or people want to go digital. But that's not how things happen, right? There's a latent need. And how do you therefore encourage people to know about that need, understand? And that's really the opportunity today. We talk about, there are a lot of misconceptions about the whole payment space, how things operate, where is friction. And there's no regular, let's say, a program where people could learn. And these could be the foundational steps for people to upgrade. I mean, every institution or every organization might have their own training program, but that's in their own way of thinking. So this is like
Using it's across the board.
it's across the board. It's like a Bitcoin moment for training in payments.
Thank you.
This is where I talk about AI.
Oh, lovely.
So the thing is, I mean, all the money will end up going in tech. The bottom line is, if you are not ready with the new infrastructure and everything that's needed, everything's going to change, right? When you talk about fragmentation, if you even need to connect to multiple APIs, we've launched multiple AI initiatives. One is called Ray Copilot, which helps you do integrations a lot faster. We have something called Ray, our the support agent, and I think that's called Ray, just Ray. And the idea, I mean, now 20-30% of queries are being just answered by them. In every way, if you're not ready for it, you're just gonna lose out, right? So whether it's customer support, somebody was talking about onboarding, like we were talking about giving loans. Now what we do is, you put in your website name, you give me your ID card, I'll fill up your entire form within seconds, I'll crawl your website, I'll tell you if your terms and conditions are aligned, I'll do everything for you, and you just need to press the button there. And that's a 2-minute onboarding or a 5-minute onboarding, what is your SLA that you're going for. So if you're not there, you're just going to lose out, right? So it has to go into tech for me.
Perfect. I was just looking if Satish was still there, and that's where he would come and share notes with you. Perfect.
So
So you just said technology is never the problem. Humans are. So I'm assuming you're going to spend money on humans now.
of course. No, I guess for Swift, we look at Swift, we are a systemically critical infrastructure. So where we're going to spend our money is to make sure that our platform that is enabling the community has to continue to be on high, we have to ensure availability, resiliency, and security. That's where we are. That's where we're doubling down. To make sure the backbone, the backend infrastructure is there to support and enable our customers. So one of the things that I just came back from the FinTech, Malaysia FinTech Week, and we talked about quantum ready, the quantum ready quantum computing. And this is something that we are getting ourselves ready at our platform level now. And in the next 2 years, in 2027, we will get our interfaces that our customers use to connect to Swift to be quantum ready as well. So you'll be going through a series of I would say, upgrades. But that is critical because you don't know when your encryption is going to be decrypted. So it's just making sure that we're always staying ahead because we cannot afford to have any problem without the platform that is today, every 2 to 3 days, carrying the value of the world GDP.
It's still technology. A lot of homework. I think through the day I heard a lot of terms, and so there's a lot of homework for bankers here. So somewhere I heard cloud ready, somewhere I heard data ready, AI ready, and now I'm hearing quantum ready. So a lot of homework. But with that, I think I'll have to draw curtains. We are totally out of time. Thank you so much. Hopefully in the next 12 months. months, I will be able to send money from my Bitcoin account to somewhere in some country, in some other currency, instantly in milliseconds. So thank you so much. Thank you so much.